Inside Traders to the show for today, Wednesday, August 9th. What a bloody red day it was today. I don't know, like, unless you owned what, like deer, cat, Home Depot, you had like a little bit of probably red in your portfolio today. And so I got nuked. I've been adding calls slowly, and if you look at what the smart money is doing on the order flow, which I have on the screen right here, you can see that like people are now buying like calls and stuff. It was a red day, but the actual environment seems to still be bullish. I'm kind of at my limit for being willing to believe that we're still in a bull run just based off the price action. And there's a lot of different factors happening, right? Okay, so you have like a credit downgrade, and you have like a few different kind of like external factors that give the sellers a reason to jump in and start borrowing money to short companies. And so like they're waiting for a good reason, right? And all of this is happening ahead of the next CPI report, which could contain any kind of surprise, upside or downside, actually. But I think most people know that it's expected to be higher than previous reports. And so we'll see how the market digests that. And I think there's probably a lot of people just taking money out of the market ahead of that report, like being willing to like buy back in a little higher if it's good, or lower if there's like a downside surprise, which there may well be. And so that's like kind of the macro is, I don't know. Is it a bear or a bull? This says it perfectly. First of all, like we still have a ton of money coming into the market. We have a ton of price action. And if we go to the dark pools, which I don't even know, like is what it sounds like. Yeah, so we see $1 billion, 2.4 billion. Like from my understanding, these are kind of like really elevated levels, at least from what I've gleaned from the people that claim to know about such things. So this is another big one, 3.9. So we have like billions of dollars being transacted over this period of time. And the market, like ARK, has like had a 15% peak to trough or whatever retracement. Maybe it's like 13, 15, something like that. And that's pretty epic, actually, for that to happen in like 9 trading sessions or whatever. And so that's another good example of like why I think technical analysis is pretty difficult. Let me get out of the frame here and let's take a look at ARK. So, yeah, you can see that. First of all, like we see these massive red bars into close. So tons of volume of selling into close. And I think we crossed some like really important technical thresholds to the downside. And so there is a chance that I think ARK continues to drop. I don't know. Look at this band here. The lower level of this band is just going straight down. Womp. So whatever, maybe there's some rebound. I think it's all dependent on CPI, actually. I think the whole thing is just going to go by whatever the numbers are. And so, yeah, that is a long decline. Let's zoom out a little bit more. How do we zoom out? Sorry for the dead air. I'm just like trying to figure out how this graph works. Anyway, whatever. You get the idea. It's a long decline that we've been in. So what we were peaking up here at about $50. Then we fall off. And look at this. Like we have, to me, this is the question. if I was like a short seller and I wanted to basically, it seems possible to me that you could get a bunch of shorts together and create technical breakdowns of a chart. And every time you create a technical breakdown, you're going to trigger algorithmic selling, and the traders are going to, follow the charts always. And so, like, the technicals on ARC are pretty bad. They're pretty bad. Bad technicals. And so this is the tricky part of like using any kind of like leverage, is you really have this duration risk. And if you're buying in the longest of terms, well, that's a ton of extrinsic value, and you're not going to have as much like delta, which is what we want. We want the contract to move with the stock price. And that comes with, like that volatility cuts on both sides. And so right now it's cutting to the downside for any option holders in the market in the last couple of days, as prices are just, I think, probably going down everywhere. And one of the things that is a good argument for, hopefully people like find a way to hedge and find a way to like insure themselves and make sure that you're not like playing with more money than you can lose. That's for sure, right? You got to be able to have some way to make more than that in the future, or at least believe it. And okay, well, so what is the point of all this rant? I guess I was saying, if I'm like a short seller and I want to break down a stock, like Bill Gates shorting Tesla. Well, if he was doing it strategically, he would time his shorts with market events, and then he would use the already like kind of like fragile structure to penetrate that and break a key technical level. And then as soon as you break that key technical level, you're going to trigger algorithmic trading. It is going to happen. And every key level you break from there triggers more and more trading. And it's done by algorithms and people. And I'm sure there's psychological effects, and there's probably like thresholds of like 1% and 5% and 10 and blah, blah, blah. But there's so much momentum to all these things. And something I want to understand better, which I know is like the best part of it, but hurts in the opposite direction, is the velocity of call options. So the big difference between a call and a put pricing wise is one is unlimited and the other is fixed. And so like with a put, you kind of have your risk really well defined, but you also have your returns very well defined, which is probably the wise, move. But if you want to like really have no cap, no ceiling, then you have to have a call option. And if you want to like really have an effective way to hedge your portfolio in a decline, it is actually, you can sell calls and then buy puts. And it's remarkable how well it works if you can time it right, because it sucks to do it at the bottom and then you're just like cycling these sold calls and puts and like trying to like, scalp a little premium or whatever. Anyway, what would be nice is if one could develop a system that could take all of these indicators and kind of create some, automation. Some algorithmic trading would be nice. And I think that there's APIs that, if they don't exist, will exist soon, that will make all that maybe even more possible than it is today. And so, yeah, the technicals on a bunch of these charts are pretty bad. We could look at Tesla. It's pretty bad. Technicals, that's neutral. But still, it's in a downtrend. No, that's the analyst rating, more technicals. Oh yeah, it is bad. Yeah, it's definitely in a downtrend. So it's breaking at all these levels. And if you want to get like the "you are here" moment with Tesla, it is pretty, shocking. Let's get that "you are here" moment. Year to date. Let's go 1 year. Longer even. Okay, there we go. So yeah, you are here. Like there's still all this, but you still have all this. This is what, 2020? Is that? Yeah, this would be 2020. So this is like the pandemic, right? Yeah. So this is like the pandemic. And then that's a long time ago, but it's not that long ago that it was at $20. And then you have a 10x already to here. And so, like that's a big 10x. It's going to take some time to digest that. But if you look at it, if you look at Tesla from a technical level, it is breaking down. And so, yeah, dicey to play these. I think that you could just probably play it safe and, wait until you have a really clear technical signal. And from what I understand, if we zoom in here and maybe go to maybe day is actually good. How do I stretch it out? So yeah, I think the way that these guys do it is they just kind of look at the chart. I'm making this up, but I'm going to pretend to be a technical analyst. And they're going to be looking at the history of where we've intersected this price before. And on Tesla, it actually does look like we have, there's so much volatility. This is kind of the same thing with Coinbase, where this is all unproven grounds. So it's going to be choppy waters. But yeah, maybe one day I'll be able to provide some technical analysis. For now, I can just say, even relative to the short term, we were just here at $100, and now we're here at $250. And that happened in January. So that's 6 months or whatever, 7 months, 8 months. Time is warped. So thanks for sticking around in this live stream. Look at these bands. You can even see these bands are widening. And I think that makes sense. It's hard to know with Tesla where things are going to go. You don't know who the sellers are. You don't know who's shorting it. And a lot of these dynamics go into the what am I talking about? Yeah, obviously they go into the price. And so if I was super bearish, I would be looking at this 200, 185 to 200. This seems like a really strong line in the sand or whatever. Because look at this giant move. And this gap, I guess, gap down. Now, I think how the bulls consider it, though, is they look at this red candle gap as an opportunity. Not even the bulls, I think the traders. And so I think what the traders would say is you should be patient, wait on the sideline for a clear technical breakout, which back to all-time highs, which would be $400, which is pretty high. And so right now it's at 250 and it's choppy waters. That's kind of how I think it's going to be for coin, because it had this big decline. There's just not a lot of price history to compare this to, right? It does seem like we have really, let me zoom out a little bit more. Let's just go year to date, actually 1 year, maybe. Okay. So yeah, it seems like we have clear boundary here at $70. There's also some interesting lines at right about where we are now, actually $85. Um, Everything is kind of just at an interesting level. That's what I'm saying, where I can't tell if it seems like we're in a bull market, and I don't really know what additional information the CPI is going to provide that is going to be like not expected or whatever, or what kind of Fed policy might change to the downside that hasn't been considered. But maybe there is some new information that the markets are pricing in. Or maybe we just had this crazy run up, like look at this candle, whoomp. Like maybe this is like a retracement that is totally normal in a bull market to have a retracement. And so, but yeah, like a bunch of these charts are technically broken. So anyway, that's where we're at. And like, I'm not an expert in any of this, but I'm learning here with you guys live as we go through it. And, my kind of gut is still we're in a bull market. I just can't see what is going to change. Even if we have a recession, what does it mean? We're not going to have a recession in tech. We're going to have a recession in Walmart or whatever. But like, even if we have a recession, I just really see this productivity tailwind, and maybe I'm like overestimating that or mistiming it or something. And we are going to go and retest the October lows. For me, it was December lows. But either way, like we are at this technically interesting place where like, if we were at like $40 a day, I'd be like defeated. But like 43.20 is a interesting level for ARK. And 242 for Tesla is crazy. That's crazy. I think Tesla is just like probably got some pretty good selling pressure, and there is like the market can't rally without Tesla. It's never going to happen. If we're in a bull market, Tesla is involved. That's like how it, I'd have a hard time seeing us being in a bull market where Tesla is on the sidelines, right? And so as long as like Apple and Tesla are languishing, then I think we'll continue to retrace and test these levels. But we've had some pretty big drops. Like even going back, let's look at ARK again. I think that from like technical levels, okay, so again, like look at how clear that is, this top here. So now this prior resistance, will it be support? If it isn't, then look at all this no man's land. Like that just opens this up to like total no man's land, which is kind of crazy. And so, yeah, I can't tell. We'll find out probably real quick in both how the market reacts to the CPI report tomorrow and just generally like how companies perform. As far as I can tell, earnings season has been better than most people expected, and companies are generally beating with like moderate guidance, and there is not some new thing to cause like all these red candles other than just like hedging and stuff ahead of like CPI and or whatever. Maybe we're in a bear market. I have no idea. But well, the price will tell us for sure. To me, we're already in a bear market because like, look, we already gave up on this level. Is that all the history? I thought we had like a stronger support there. Let me zoom out a little bit. If you're just listening, I got to find a way to like describe what I'm saying, what I'm seeing. I'm just looking through the history of the price and trying to see where we were visiting where we're at now. And we are kind of at an interesting level. What am I on a day? Let's go to like an hour. If you don't like doing this stuff, don't be here. This is what I'm doing today. Yeah, like look at all these intersections. So I think I was looking at this. Yeah, to me, this was my level. I was like, we're not going to break 45.15. But now that I'm looking at it, there isn't a ton of support there. There isn't a ton. But look at this. Look at this. So this lower end of the band, we're like getting pretty close to that 42, 44. So yeah, to me, if like there is a plunge, like the next price move, if it's to the downside, is going to be a plunge because there is no more support in this area. This is the bottom level. What? 41.61. Yeah, it would like be a plunge down to 41.61, or 42.85. Maybe. Who knows? But like, it makes so much sense that the price always goes and it revisits these lower levels. And then one day it'll revisit those higher levels. And it will probably have the inverse action of whatever the previous thing was. So if it gapped down, it'll gap up. If it gapped up, it'll gap down. That kind of stuff. But not always. And things can go to zero and things can go to infinity. Not really, but they can have unlimited upside and definitely can go to zero. So where are we at? Yeah. Just looking at the history of ARK, we're in May, we're at like $35. And then by mid-June, we're at $45. So a full $10 higher. And then we went down to $40 and then kind of bounced around $40 to $45. And then we had this whole breakout all the way up to like $50, and we've retraced down to 43. So that seems like, yeah, below every technical limit. Like, what trend could this be connected to? We could be in a bear market. Anyway, who knows? We'll let the price inform us. And I'm going to be talking to ChatGPT and trying to figure out how all this like analysis works. As far as I can tell, you have all of these technical indicators, which is a bunch of stats and probabilities baked into a chart. And they just give you a little bit of guidance on like how the price history has different ways to visualize the price history. So we have these Bollinger Bands, and they kind of give us like these probability boundaries. And we have like these candles, and they tell us about the action in that period. And we have like moving averages and all this kind of stuff. RSI, what is the RSI? So yeah, it does seem pretty underbought, but this is, I think, like a long time period. What is up? Or oversold or underbought, whatever it is. It's hard to say. Yeah, no, that does, I don't know. Are we in a bull market? I think we'll find out in probably a couple of weeks, right? And either way, this is like pretty freaking fun to come and broadcast all these ideas to the internet. Hopefully I can like do it in a way that's organized and interesting, and maybe like start getting some kind of like actual structure to the show. But generally, I just want to talk about the order flow and show you guys what the insiders are doing. And so today they're calling up Tesla. What is this? mRNA? Moderna, I guess. Amazon, whatever. So like some healthcare or whatever. What is this? Yeah, like nothing interesting really. Bearish flow is on Nvidia, Apple. I don't know. Yeah, like this is pretty varied and interesting actually. So I am not clear on why any of these are happening. I'll tell you, I did see the order flow come in midday for like Celsius and Toast and a couple others that, yeah, there's Celsius, I guess, that really did give an early indication of some of the price action. And so if we look at the sentiment, okay, it's bearish, fine. But still, the flow is so even. Like, we're not at 60-40. I think this is hedging ahead of CPI in case there is something really drastic to the downside, because who knows, these numbers can be anything, right? And this market is very data dependent. And so but of course it is. It's driven by algorithms, and they are also technically dependent. And so as things break down, like selling begets selling and buying begets buying. And that's why call options are so interesting. Like I was talking about before, they have all this velocity to them. And so you get velocity to the upside and the downside. So velocity is an interesting point with an option of like, when do you actually decide when to take a loss and double down or sell or get out of the trade or cost average, whatever. Like, how do you make those different decisions? With stocks, I think you can do it like in these, with stocks and puts, you can do it like just really defined. With calls, you really, I think, have to consider the velocity. So if you're buying calls at the peak of an uptrend, you're buying like a ton of velocity. And I can't tell you exactly from which indicator does that. It might just be implied volatility. But either way, there is a velocity to the upside and to the downside. And so with options, I don't think you want to, you need to consider really the history of the contract before you buy it. I think it's important to just get a glance at where you are, because you might be buying like the top of this big freaking chop that is some level. Like, this is how options work. As they get closer to the money, like, you can have these really dramatic and basically according to the money and the time, the moneyness and the time value of the contract really sets its volatility. And the closer in time and closer in the money, the higher the volatility. But that's not really true. I mean, there's like really volatile contracts really far out into the future and out of the money. Anyway, the point is, like, there is a certain velocity to these call options that one should consider. Because look at all this. If you're buying a call option in ARK today, you're buying all this downside velocity. And I don't know, seems like a pretty good deal to me. Like, even if we're like gonna go and retest some crazy level, what if you just start with leaps? This is the tricky thing with contracts. Like, they give and they take. And so, yeah. Are we in a bear market? Are we in a bull market? I think we're in a bull market. I think this is a ton of selling. Look at these red bars of selling. Let's go back in time. So the last time we had this much selling was May. And then April before that, in terms of just like the height of the bar. But we've had some pretty strong buying as well, actually. But not like this, not like crazy buying. Just like, look at that. Look at that streak of selling. This is called, I'm going to break you technically. And then when I do break you technically, I know that triggers the algos and the traders eventually. And so, but then the bulls are like, no, we're coming in, ba, 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 and they drive it up. But then there's a gap down. I don't know. It's hard to interpret all this data. I don't know exactly how to interpret it, but it's pretty interesting stuff. So yeah, before we close for today, let's just look one more time at where we're at historically to get an idea of things relative to our history. So this is the hourly chart. So we're like at the bottom we're like at the mid between what? Okay. It's hard to explain what I'm seeing visually, but like if you are watching this with me on YouTube, you can just see it, right? Okay, so like there's this range here that's matching up pretty well. But it has this deeper candle down to 43, the bottom of 43. Let's look at a different time period. I think there's a technical way that people look at this where like they always look at like 5 minutes, 30 minutes a day. I'll get there in time. Doesn't look like, I think I need to zoom out. Okay. Yeah, look at this. Like we are at an interesting level. So it does seem like if we plunge, you know what? It doesn't really matter because the price is going to go as low as it goes, right? The price will go to zero if Tesla is bankrupt or whatever, you know, like, the price, like, I think the advantage of technical analysis is to be able to have some guidance on when to hold and when to test and when to really deploy, and not just to YOLO all in on the first drop, but to look at the history of the price and say, okay, where are we relative to, you know, like throw out whatever you think is happening and just look at the price, right? Just look at the price. And where are we relative to the history of this price? How many times have we intersected this? Are we in no man's land? Like NVIDIA, that's no man's land. At least with like Tesla and ARK, we have pretty good history there. Coinbase is also, I think, in no man's land. I can't tell if it's like going to 60 or 120. Like, it's crazy. And so, not that anyone can tell, but like I especially have no intuition. With ARK, I think it's going up just because I think the market's going up, just because I think we're in a bull market, as we've been in this like bear trend for like years, right? Like the full history of this stock is like, look at this. Here's the history. So we start out, let me make it a little bigger. We start out at like $22. We're like at $50. Years before I started entering the scene of investing, like 2020, we get the pandemic. We drop down to $33. Okay. All these companies, this is Tesla. A lot of this is Tesla, but also in here's a ton of great companies. We ride that all the way up to 168. I might have bought that share. I might have bought that one right there. And then of course we have, and this is why it's so important to look at the history of where you're at, because like if you're going to buy right here, fine, buy right there, but you better be like selling a call or something. Or maybe don't buy right there and just like wait, you know, a little bit, because nothing goes up in a straight line. And so, yeah, then we have like just going more through the price history. So we're for years ahead of the pandemic, which is kind of like I think a boundary line in many of our minds. We're at basically like $50, 45 to $50. And then in the pandemic, right before, we're at 55 or so, and we crashed down to 32. And then we had this giant crazy run up to like basically 140, but kind of like 160. And we hung out around 115 for like basically a year. And then that year ended with the war in Ukraine, and inflation is sticky or whatever, and a Fed rate hikes faster than any time in human fucking history or whatever. And yeah, like look at that. We can see the impact of all that on the price. So we were hanging out at like 115, and then it's just like boom, 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 boom. Also, this is the introduction, I think, of the SARK ETF, and a ton of people had become aware of ARK and just shorted it. And with that, I think all those companies, and I think that had quite the impact. Quite the impact. And I think markets are highly manipulable. Highly manipulable. So like this actually seems like a pretty fair line. Like if you take off all this chop, boom, $90. Like you got a portfolio of disruptors in their nascent stages. Even $60 historically doesn't seem like out of the question at all. But I can see $90. Look at that. You take all this chop off, boom. But yeah, anyway, meanwhile, where are we? We're at $43. And so we're like less than half of like, if you just take all this extra froth post pandemic and you chop all that off, all that money is still on the sidelines, by the way. Then you get us back to like where we are now, $43, which is actually still pretty high compared to where we just were. $33, which is lower than the lows of the pandemic, which is like, I don't know if it was like technically, we should just go look. I'm too lazy, but like just look at it, right? It's lower, at least on the band. So like how fucking crazy is that? That's crazy. That's a crazy price history on this company. And I think that we are going to fill all this with the money that re-enters the market once it's clear and safe to do so. And it has not been clear and safe to do so until maybe recently, but we don't know. So CPI, I think, like if there's something new and unexpected, that will like be a real test of if we are in a unbreakable bull trend. Because if we are in an unbreakable bull trend, what does that mean? That means there's a bunch of buyers like in all this gap. Let's zoom in. Just go through the work to zoom in real quick. And so all this, there hasn't been any buyers in this whole chunk from 50 to 43. Well, guess why? Like look at all this gap here. There's no price history. There's no action. Like we were below this price level since August of last year. Holy shit. And so there's no history above 45 for about a year. But now as we go lower, there really actually is no history still. But there's more history. There's some history. So at least there's some history. So we went from a total gap of history to some history. But there's a ton of history at like 40. And if you were really looking for a bottom, seems like 40 might be a bottom. But if we're in a bull market, if we're really like some crazy, I can't even say it. It just doesn't seem, it seems like a fucking lie to even say it. So we'll let the price action just tell us what it actually really is, and try not to make too many crazy bets while we're at it. So we have this gap up here with no price history, and all this chop that we've just gone through, 43 to 50. So $7, it's a lot. That's a fucking lot. That had no, because imagine what's actually happening here. You're getting all the market participants who like maybe wanted to get into this stock when they saw it in the 50s, but knew that it was like, like pretty choppy from all these green gaps or whatever. And they were just looking at the history and they're like, well, I'll put a buy order in for $45 and I'll see if it fills in 90 days. Lo and behold, it filled. And so that's probably happening like all around here. Like people are, like there's all sorts of reasons why you're going to have better support when there's been a recent history with that price. And I can't articulate them all, but I think it has something to do with just the more market events you have at any price level, the more that's going to slow down the price and focus it on that level for a given period of time. And it's interesting. Sometimes you see these really dramatic moves in markets and you can just tell somebody's doing something and like it's a seller or a buyer, where you'll see like a stock like dip and then it'll like kind of hover and oscillate and then it'll plunge, or the opposite where you'll see it like kind of like go up and it seems like it can't go up anymore and then it'll like spike up even like 5 times higher or whatever. And so, yeah, like you really do get to see some dramatic movements in the price. And this is a war. Look at this. This is a history of a war. All these greens and reds fighting each other. And we have been without support basically until 44 and we're at 43. So the last dollar we've been eating through this whole segment. But even then, look at that. There's not a ton of support really until a little bit lower than where we are now, about $40, which is not a little bit lower, but relative to this decline. Anyway, also, if you look at this decline historically, like it's a pretty big one. Obviously, it's not like the biggest ever, but it's been pretty rapid. What is that? I think I measured like 13 to 15% in since what, mid-July? Was it late July? Something like that. Pretty interesting. So yeah, like we'll find out if we're in a bull or a bear. If we're in a bear, it does become hard to shift the mental momentum. It does become hard to shift the mental momentum. And so we'll let the price inform us. Okay. I think that's like the 15th time I've said that, and that'll be like enough for this show. I just wanted to come on, share my thoughts, and, like learn with you guys. And if anyone does watch this, would love some feedback, and I'm going to keep this going because I want to see where all this ends up. Like, this is a whole story. This is a saga. Look at it. Look at it in its full, like, no. What am I saying? Anyway, we are at historic lows. We're lower. You could have bought this in, 2018 for more. You paid more for ARK in 2018. And Disney. Let's see how Disney's doing. I don't think I have aftermarket data. So we spec'd up to 92 almost in aftermarket. But whatever, all that can get blasted away in a second by So yeah. If you look at the Disney chart, I'm just hanging out. We're just hanging out, right? If you look at the Disney chart, we are also at historic lows. Now, you can look at let's look at, what would a bad chart be? Like GE maybe? Like, look at the full history of it. basically, okay, so you could have bought GE in 2001 for like $250. So that's a Tesla share today. And then look at this, like strong buying in the 2008 aftermath of the 2008 crisis or whatever. And so you could have bought GE in 2000 for like $350. Holy shit. Okay, so the year 2000, you could have bought GE for $350. And then you can buy it now for $35 is perfect. So it went 1/10 in whatever that is, 23 years. So if you were like a stalwart GE for life, you know, you're just like hodling GE. Well, you hodled that all the way down to like 1/10 of what it was. And so like, obviously we have to have times where we're ready to get out and just give up and sell. And it has to do with like the core business. Like, what is the productive force and value of this company? What is it actually bringing to the world? And these Bollinger Bands are so interesting. I think that's what they're called. And so, yeah, like what is the real value that GE was bringing? I guess not enough until recently, because look at this trend. So we get down to like $50 and now we're at like 116. It's pretty good. Good job, GE. I think we had a couple of splits involved here. So reverse splits. So we got GE, and then, so that's a negative example, but let's go to what I think will be in the fullness of time, a positive example. We'll see. Let's get to the fullness of time, right? Jeez. Wow. Look at the bands on Disney. It's quite a divergence there. So let's get the full history. You know, Disney's pretty freaking choppy. That's crazy. So I don't know. Like, wait, is this this is 2011. Interesting. Wait, yeah, this company's like 1 million years old. What am I talking about? Okay, so here's the full price history of Disney. Wow. So we had a really big run up from 2011 to 2015. Interesting. So Disney, they're just like slinging what? Candy corn at a park. I don't know if it was the parks or the movies, but look at this. Like that must have been like a bankruptcy fear or something around 84. Tons of selling around 84. And then whatever, the company's just growing year by year, decade by decade, slowly but surely. In the year 2000, we're right kind of elevated around $23, but really it is like $35 down here in 2008. It really is like 2011, the stock just takes off, and I don't know why. But that's way before I entered the game. So like I would have probably been paying attention to around 2012 actually. So maybe that is. But still around 2015, we kind of like peak at $121. Holy shit. So in July of 2015, Disney peaked at $120. And then it had this huge red candle down to like $90. And we did some consolidating with slow movements up, basically tons of chop, but just kind of going through that range of 90 to the previous all-time high of 120. And then we have this breakout event in 2019, which is pre-pandemic, right? Like, what is this company's history in the pandemic? Or is okay, this is the pandemic. Okay. So Disney pre-pandemic is trading at like 140, 150. Damn, that's epic. Okay, so Disney was trading at like 150 then. And I think their business has had some setbacks for sure. But like, what is the brand value of Disney and Marvel and even ESPN and everything? Like there's a ton of brand value that is hitherto untapped and like of infinite value. Like you could just get it. It can get better and better. Obviously, you can bankrupt a brand. Like I'm not saying like they're like, you know, Bitcoin or whatever. Or I'm not saying they're anyway. So we got 150 on Disney before the pandemic. In the depths of COVID, we get down to like $80. Okay. That's the depth of COVID. That's peak fear. That's basically everyone wonders if it's going to be zombies and World War or like the rage virus or whatever. That's like Putin invades Russia while there's a global pandemic. Maximum fear, maximum uncertainty, which is the real problem. So we get this giant red bar shafting us down to $80. And then we have this great retracement basically immediately back up to 105 and then two gaps up to 180. And then I think that's when these gaps up are like when they announced their profits or something from the streaming service, or maybe it was their subs. But either way, they like spent a ton growing their streaming. And that was seen as like a pandemic play or whatever. But like meanwhile, there's so much money on the sidelines and markets, and Disney is where it was in 2015. Like that's crazy. I don't know. Like to me, that's crazy. Now the question is like, can it go lower? Yeah, it can go lower. Here's the current low end expectation is like $60 according to this ban or whatever, which is pretty crazy. So there was a non-zero probability of $200 in 2021, and these are all just technical indicators. They don't mean anything, but they give us an idea of like, they do kind of follow the price, right? It's all just looking at the price historically. And so point is, Disney peaks in 2015 at $120 and basically crashes down to like $90. $90. It's below $90 now. It's below where it crashed to and found support for in 2015. And so, yeah, we had strong support at like $86, which is also below where we're at. And maintain that support all the way up to the 90s. So basically, they're saying that Disney as a business, as a brand, and in the accumulation of everything that it's produced was either vastly overvalued in 2011, which is hard to see how that's possible given so much of the Disney business of the future is still like being developed, and what could they have seen in 2011? I don't think they saw like Disney Plus or whatever, or like their brand acquisitions. And so anyway, also look at this. We have this giant gap up. So it's probably all earnings based or something. But either way, we've had like this massive chop down in the company. And I think that this is probably due to a lack of market participants from all of the last years of fear, and which we are at the cusp of finding out if those fears are abating for real, or if we should still be afraid. But I don't think so, because look at this. Tomorrow that's gonna be like boom. And so it is, like the interesting thing for me about like paying a ton of attention to this stuff is this is all like happening in real time. Like this price history is a war, and all of this territory was lost in a matter of a year. And if the company has value, you would imagine that as more people come back into the market and look for a good place to buy, they're going to look at the price history of Disney. And they're going to be like, holy shit, I could have bought this in 2015, but like I would have paid more in 2015 than if I just held it through today. That's crazy. And look at all this green volume buying. So for real, like in 2011, we start getting a ton of buyers at Disney. And then we've had a ton of sellers more recently. Be cool to like be able to like get an AI in here and it could just tell us exactly what is driving these events, you know, like if it was earnings or macro or what it was. But for now, we just kind of have to guess at it and look at the charts and divine what we can. So, yep. Good luck everyone tomorrow with CPI, and like hopefully, you know, the right things are happening and we're in a good like upward trajectory in life and a society with AI and automation. That's what I believe is the case. I'm a big proponent of AI and the great impacts that we'll see on society as a result of everyone being able to have a extended intelligence to help them accomplish things and learn and develop, and as a productivity tool for anyone, but especially obviously for, you know, like content creators or knowledge workers or people that spend a lot of time like on computers. AI is an incredible productive force even today. I use it in programming. One of the things when you there's a lot of boilerplate code, there's a lot of stuff you just have to copy and paste, and AI can do all that stuff for you. It really is replacing a lot of like the manual, repetitive, tedious labor of like the minutia of any kind of like role in society. Has the potential of being all that like annoying work has the potential of being automated through AI. And I think a lot of what the markets over the next 10 years depend on is if that statement is true. Because AI might not be like some crazy cool thing, right? Like maybe the transformer is some statistical model that works because even saying it's a lie, I can't even say it. I think AI is real. And I think that the breakthrough is probably going to continue happening this way. But like, I think one of the breakthroughs might have been just considering things from the perspective of our own mind. And it's so intuitive. Like, what are we doing when we're speaking? We're just trying to predict the next word, right? Like you don't know what you're going to say until the moment you've said it. And neither does AI. When it's taking everything it's learned and it's synthesizing it in real time using like all these weights and biases in some kind of matrix of configured parameters to come out with the right word. And then it blurts out that word and it's so satisfying and it's right. Now, is it factually right? Not often. I mean, maybe like not often enough, I should say. But like, can it help you reason? Can it help you think? Can you give it a bunch of data and ask you to give it back in a table format or as JSON or as whatever? Like that is crazy. That's crazy. I will routinely use AI to do a task for me, which one, I otherwise wouldn't just have done because it's too annoying. But two, I will use AI to do a task for me that is that it would take me 5 minutes and it does it in 10 seconds and it does it perfect. And even if it doesn't do it perfect, it does it good enough where I can copy, paste, and fix it in like 1 second. And so to me, it's undeniably a productive force already. And it doesn't have long-term storage or persistent memory. And it doesn't have any kind of ego or identity. And like, it's not a very fully formed mind at all. and it's already capable of generating, I think, what is undeniably emergent phenomena, where the designers of the protocol, like the scientists at Google who came up with the transformer protocol, didn't like intend to have it be really good at N. Now, I'm not in those meetings. I don't know if that's exactly true, but from what I can tell, these AIs can do things that are hitherto unimagined. And guess what? As far as I can tell, the things I was like testing it with, nobody had ever tried before. Like, we released them, and we released this chatbot to the public for the first time in near the Q4 2022. And from there, it's like only gotten worse, by the way, is they add these like guardrails on it. The first version was like literally more capable of, I'll say, GPT-4, which is like mildly more impressive than GPT-3, but it is better. And so, yeah, like, first of all, here's why these Google dorks didn't even know what they had, because they sat on it. First of all, they just published it for free, and then they sat on it for like a decade. Maybe not a decade, but like 5 years. And so like they didn't know the emergent properties that AI could be used for. And if we really are going to have AI lawyers that are better than actual lawyers because they understand every law that was ever written ever, which is impossible to do, but a stats model can do it in a second, easy. Or the same thing with diagnostics and medicine, or even just like trading. Like, what if AI is like an infinitely better trader? Like, it just is built for analyzing the patterns and like finding out in real time through a pipeline of the information, like what to do. We'll see. Like, we'll see how well these statistical models can reason and think and remember and learn and persist. All those are important distinctions between us and large language models that don't exist today. Like, we need to be able to talk to these LLMs as if they were a person, and they need to be embedded into our ears, into our freaking heads. Like, we need a seashell. We need like a little earphone that has LLM. Just imagine if Siri was always listening, which she already is, but now she's going to be able to respond back in real time with infinite information. And yeah, so it's an exciting time to be alive. And I think a lot of like the challenge right now is just to persist as long as you can. Maybe some people like think that we're in a very bad time, like, and it's going to get worse. That's not what I see. I see AI, automation, technology, society, like everything is advancing, of course, socially. Like, we're always, going to be, the politicians are giving us the runaround with the usual stuff in America, which is now we're just on a podcast. But yeah, like, people are talking about bullshit that doesn't really matter, and is unsolvable. Like abortion, well, you can't solve it. Gun control, good fucking luck. Immigration, like whatever. These are all distractions. The world is getting better and better and better and more productive, and ever more so now that we all have this commoditized intelligence that can assist us in our learning and productivity. So like, that's why I'm a super bull on the market, and why I think we're going to create historic levels in every index, in every company, in every whatever, sometime soon. I don't know if it's 3 years or 13 years or whatever, but that's an unlucky number. Let's say 5 or 10. I don't know if it's going to be in 5 years or 10 years, but I think it's a lot closer to 5 years, especially given what we've just gone through. Like, a global pandemic, threats of like world war. Putin is still like jacking off in Ukraine, whatever he's doing out there. Like it's the worst. Like we hate it. And so like we've gone through this time of great uncertainty, and there are still risks out there that are omnipresent. But I think if you do look at the macro, like AI gets better every day. It really does. It really does. You want to know why? Because you have dorks sitting at their computers typing on code. I'm one of them. Like I want to feed my AI all my portfolio data and give it a like a constitution and give it a role. Like this is who you are. This is what you do. This is the language you should draw on. And eventually to give it access to real-time information. Like what is the most high volume options contract traded in the last second, minute, hour, day, week, year, ever, you know, like those are, I mean, the questions that you'll be able to ask, it's endless. And one of the questions might be, how do I make the most money with the least capital? You know, like what if it can answer that question? It might be able to in the fullness of time. Like there has to be dorks that understand this technical analysis like better than anyone, and also know how to like work with a LLM or know somebody who does or whatever that is already experimenting with building models that can reason about each like nanosecond of each period of each candle with every technical indicator they can think of as a rational thinking machine instead of a matrix of like, you know, or whatever, a bunch of if this, then that situations. I don't know how algorithmic trading does today, and maybe this will never actually like be useful as much for AI, but like maybe there's a tremendous possibility unlocked when you have in real time a rational statistical thinking machine reasoning about the whole history of everything that it's given with real-time information. Seems like it could be very freaking powerful. All this remains to be seen. Right now, AI is like still somewhat of a novelty, I think, to many people. And we need that. We need things to happen with AI that are undeniably like could never have been accomplished without it. That's what we need to start seeing more and more of. And I think we'll get there. But for now, like, if the market is anticipating that, we should see this bull trend continued in the QQQs as well. Which, look at that. We've had the tiniest give back. Look at that. I mean, the QQQs, like, I could see this getting chopped off. Wow. I could also see it, like, you know, they could just keep on running. Let's see. All time. So the QQQs is a funny one, because this is the ultimate pandemic play. So in COVID, so the Qs have basically been on a bull streak since like 2009. Okay. Even look at this decline. What is this? This just happened. Wow. That's crazy. So the Qs have been in super decline. The Qs are basically big tech. So Google, Apple, Netflix, Facebook, Tesla, whatever. All the big tech companies are mostly what makes up the QQQ. And yeah, like look at that streak. Holy shit. And so we actually like basically the pandemic did nothing. It did nothing. Holy shit. Okay, so the pandemic to the QQQs brought it from $200 down to 160. I mean, that is a deep tail on that candle. And then like immediately back up to like 200. Immediately. And then on to all-time highs of 396. And we're basically at all-time highs. We had this like give back here. Yeah, would have been nice to get involved in the Qs around this level. But who would have known? Like, this is pretty good. Okay, so now we're getting some price history. Can we go back like further in time? No, that's the full price history. So we have a ton of history from 265 to 300, and even above that to 320. And we have a pretty good layer from 320 to 360. But we're still like right at the top of that layer. So this will be really interesting if we go below where we are now, basically. You see, everything is at a key level. That's what I'm talking about. That's what I'm talking about. And if we go below this, like, why wouldn't we be going down to 315 or whatever, at least to 350? Why not 313? Because we always have to revisit these old levels. We always have to go back and test that price until we don't, you know, like, and we probably don't have to test $20 on the QQQs. Maybe we will one day, but probably not. I could imagine though that like these green bars could get tested. Like, where are we totally untested? We're totally untested from like 115. You know, like there's almost nothing from, you get some tests from 150 to 220, but this is like been our first real test in recent times, has been the 250 to 300 range. Interesting. So when was this? This was October. Okay, so the low was October. Boom. 254 in the QQQ. Wow. So that was like peak inflation, peak selling, people taking money out of the market, max interest rate fears. That would have been a good time to get involved with the QQQ. How could we have known to get involved when everything would have been so painful then? Well, we would have been looking at the price history, seeing all these red candles. One indicator might have been around when we broke below 300, because that would have been like, we have some price history to deal with. So if you were a super bull on the way down, maybe you got involved around 300. But if you were more patient, you might have waited to like get below this previous sell-off candle of what is that? I can't even tell. Is that maybe Russia invades Ukraine? Maybe. I don't know what that is. But anyway, we had this red candle at like 260, and yeah, well, that would have been like the perfect bottom. That would have been the bottom. Anyway, but nobody can really guess this stuff, but you can go back retroactively, and hindsight is of course 2020. But I think that hindsight teaches us something about where we are today, and just about how the history of this company just generally, or index, or just the price action of whatever we're trading on. So it's cool. It's stats, it's numbers, it's colors, it's lines, it's fun and interesting, and I'm going to keep doing it, even if we kind of like, you know, don't always get paid. But hopefully we'll get paid with subs and people like giving feedback, and, you know, I will provide my own structure to this show in the future and make it less of just like me thinking out loud. But for now, it is a lot of I'm learning. And so, you know, like mistakes will be made, and all I can, you know, do is like try to offer great stuff as best as can. So hopefully this meets that bar. Either way, if anyone hears this, thank you. Good night.